Hey friends, welcome to today's Singapore Market Digest. I'm Wei from the Investing Iguana, and today we're looking at some interesting movements in the Singapore market. Let's dive into the latest updates on some key SGX stocks. First up, Capitaland Investment, CLI. This asset management giant, trading under the ticker symbol CLI, has made headlines with its bold move into the data center space. CLI announced it will invest over $700 million to acquire freehold land in Osaka, Japan. The plan? To develop a 50 megawatt data center and seed a future data center fund. This is a strategic step for CLI as data centers are becoming critical in our increasingly digital world. On Monday, CLI's shares dropped by 1.6% or $1.04 to close at $2.42. Despite this dip, the company remains a heavyweight in the real estate and investment sector. Its trading volume was moderate, reflecting some caution among investors after the announcement. Technically, CLI's chart shows some resistance around the $2.50 mark. And with this news, it might face short-term volatility before stabilizing. In the broader industry context, CLI's move aligns with global trends, where major players are expanding into data infrastructure to tap into growing demand. Next is Suntec REIT, a familiar name for those following real estate investment trusts, REITs. Suntec is currently under the spotlight due to a mandatory conditional cash offer from property tycoon Gordon Tang and his wife through their investment holding company, Helios. The offer price stands firm at $1.19 per unit, and as of Monday evening, Helios and its concert parties control over 35% of Suntec's issued units. Suntec's shares fell slightly by 0.8% or 0.0 to close at $1.18 on Monday before this update was released. The extension of the offer deadline to February 7 could see more action from investors looking to capitalize on this development. From a technical perspective, Suntec's stock has been trading near its support levels around $1.17, $1.18, but any significant movement will likely depend on how the takeover bid progresses. Compared to its peers in the REIT space, Suntec's valuation remains attractive but hinges on how this acquisition unfolds. Moving on to Keppel Infrastructure Trust, KIT. KIT reported a mixed set of results for the second half of 2023. Its distribution per unit, DPU, dropped by 54% year-on-year to 0.0195 due to special distributions paid out in the previous period skewing comparisons. Excluding these one-offs, DPU actually rose by 1%, showcasing some underlying resilience in its operations. Revenue for H2 surged by 24.6% to $1.2 billion from $972 million previously, driven by strong performance across its portfolio of infrastructure assets. However, KIT's units closed flat at 0.1455 on Monday as investors digested these results cautiously. Technically speaking, KIT has been consolidating around this price level for weeks now, indicating indecision in the market. Within its industry context, KIT continues to provide stable cash flows compared to other infrastructure-focused trusts, but faces challenges like rising interest rates impacting yields. Now let's talk about Lendlease REIT, another player in the REIT space that had less than stellar news recently. For its first half ended December 31st on 2024, Lendlease reported a 14% drop in DPU to 0.118 yen due to higher finance costs and lower net property income (NPI). Additionally, an enlarged unit base diluted returns further. Distributable income fell by nearly 12% year-on-year to $43.5 million as macroeconomic pressures weighed on performance. Lendlease's units dropped by 1.8% or 0.01, closing at 0.545 on Monday before this news broke out. Technically, Lendlease REIT is trending downward with no clear support levels in sight yet, a sign that investors are wary of further downside risks tied to higher borrowing costs and softening property values globally. Switching gears slightly, we have Keppel Pacific Oak US REIT, Core, making waves with its latest earnings report, or lack thereof when it comes to distributions. Core revealed an 8.8% decline in distributable income for H2 2023 compared to last year and decided not to declare any distributions for this period. Revenue dipped by 3.7%, while NPI saw a sharper drop of over 14%, reflecting challenges in its US-focused property portfolio amid rising interest rates and economic uncertainties stateside. Core's units remained unchanged at the sale Barcelona 24 on Monday despite these lackluster results, a sign that markets had perhaps already priced in weaker performance beforehand. Lastly but not least is MM2 Asia, which operates cafe cineplexes here locally, but finds itself embroiled in legal troubles lately over unpaid rent claims totaling $2.7 million across 2 cinema locations. This unfortunate development sent MM2 Asia's stock tumbling down by more than 8% on Monday alone, closing at just 0.011 per share. The company has struggled post-pandemic amidst declining cinema attendance rates coupled with mounting financial pressures, a stark contrast against competitors who've diversified revenue streams beyond traditional box office sales alone. So there you have it, today's roundup featuring everything from ambitious expansions into data centers, CLI, all the way through ongoing corporate dramas playing out within entertainment sector, MM2 Asia. As always, keep tabs closely, follow developments across these names alongside broader macroeconomic trends shaping overall market sentiment here in Singapore.